Gold and silver's price is falling. Is now a good time to buy? Just because you bought in the dip, it doesn't mean that you're paying the lowest price. Here are some warnings when buying gold and silver in the dip, as well as some tips and tricks to be able to time the market. Hey everyone, welcome to Campbell's Coins. Maybe you've heard of some channels throwing out Nostradamus level price predictions on gold and silver. Have you ever wondered how they do that? Do they apologize for being wrong? I'll get into this in a little bit. Should you buy in the dip? Pistol Packing Pilot accurately stated recently, only smart people buy the dip. This is true, but it's difficult to time that dip. Just because spot price goes down, it doesn't mean the price of these precious metals at your LCS or online bullion dealer will fall accordingly. Here's why. Dealers bought at a certain price before the dip happened. Now they have product purchased at a higher price that they can't sell for any less without taking a loss. If they bought and spot price remains fairly the same, it wouldn't really affect the premiums, but when the price plummets $175 in a couple of weeks, the only way that dealers can lower the pricing is to buy more gold and silver at a lower price to dollar cost average their entire stock. And this is only possible if they can find gold and silver from their supplier at a cheaper rate. If they can't, their prices have to remain high or they lose money. If they suspect spot will keep falling and they aren't able to get lower prices, they just won't buy. And I don't blame them. Can you blame them? If you owned a business, would you take a loss just so that somebody could buy cheaper product? They bought at a specific price, and if the price of gold and silver has been sliding downwards for the last couple of weeks, it's unlikely that they have a cheaper bought-in price. It takes a few weeks from when they place the order for that order to arrive. I'm sure many shops are placing their orders right now in the dip, but it won't arrive until later this month. Dollar cost averaging won't take effect for quite a bit. Like I said previously, only if they can find the product for a cheaper price. This is why prices on precious metals premiums have a slower deflation during periods of large dips. The only way that an LCS can sell metals for a lower premium than what we're seeing today is if they bought those metals from an individual who comes into the shop. There's not a whole lot of people selling in the middle of a dip. They tend to hold. So you're not going to see a whole lot of those deals out there. And this is why we are still seeing high premiums. A couple weeks ago, premiums on American Gold Eagles and Gold Buffaloes were about $100. Now they're about $130. This increase is demand and bullion dealers' dollar cost average reaching its pricing limit. Even though spot price is around $1,700 an ounce, if you bought right now, more than likely, you're paying the same price for that gold buffalo that I did when spot was at $1,750. How can you time the market? Have you ever wondered how some channels seem to know where spot price is heading, or they claim they do? Many channels repeat info they acquire from traders. Technical traders use historical patterns of trading data to predict what might happen to stocks in the future. Since gold and silver is traded on the stock market and spot price is tied to this market, predicting where GLD and SLV go helps point out what we could see spot price do. Whether or not channels will admit to using the info they receive from someone else when they quote unquote predict where gold and silver will go is another issue entirely. I have found technical traders to be about 50% correct. Yes, they review historical patterns in charts and graphs, but world events can throw these charts into chaos. 2020 and the Ukrainian invasion are just two examples of this happening. I won't tell you which technical traders I follow, not because I want to keep the info for myself, but because if you listen to one of these individuals and they're wrong, I just don't want to deal with the liability of, you told me to do this. I can tell you there's one out there. It goes by Gareth Soloway. He is a technical trader for cryptos, and he predicted Bitcoin would fall below 20,000 long ago when Bitcoin was reaching its all-time highs in the 60,000s. Some gold technical traders have mentioned that if gold breaks below the 1715 range, we could see it fall more to around 1670 an ounce. They were talking about this potential drop a week before gold fell below 1715. This same trader that I'm referencing was saying that if gold stays above 1715, we could see it rebound and go up much higher in a shorter period of time. Since it broke that 1715 level, it's definitely possible that we could see it drop down to that 1670 an ounce level before rebounding back. If you're interested in seeing where you think gold and silver might go, find your own traders out there and follow them and see how right they are with their predictions. I've noticed that most traders tend to take this non-absolute road where they go, if it hits this mark, it will fall below this. But if it stays above this price mark, we could see it going up. So they don't take the, oh, this will definitely happen, but they kind of give you an idea of, well, if it does happen, here's what we could expect. So should you buy in the dip? My answer is yes, but be cautious. It might be a dip with a strong upswing, or it might be one dip of many. For me, I'm getting gold and silver when I can. As I pointed out in my last video, I'm not worried about spot price. With everything going on here and around the world, I like to focus my energy in obtaining more ounces as sustainably as possible, rather than waste that energy worried about saving a few fiat dollars. Time is money, and if you're wasting time trying to time the market to the lowest possible dip, well, I think you get the picture. Your time is your most precious asset, and I appreciate you spending it here with me. Thank you all for watching. This is Campbell's Coins, and that is my 2 cents.